Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the daily market recap. As per the usual, we're going to be digging into the charts today to see what happened, how the market's moved, and to mark up what's going to happen next. Don't forget to smash the like button and let the YouTube algorithms know what's up. Heck, while you're at it, hit the subscribe button too so you don't miss out on the next video. If you really love what we're bringing to the table and you want to look into a way to get more screen time with us, check out the join button below to join as a YouTube member. YouTube members, they get to sit in the VIP room ahead of the New York Stock Exchange Open while we create our trade plan for the day, so you have everything you could possibly need before the opening bell. So first off, let's jump into the Nasdaq and take a look at what's going on, because really, starting off on the 60-minute perspective first, we can see that there are a few things that stand out. Obviously, we are still working in that 5-wave cycle to the upside. It's continuing its way higher. We had a really sloppy wave 2, but when we finally started breaking away, wave 3 ended up being relatively strong, pretty concise, straightforward, all the way up to almost 300% of a move. Now, once that 300% move was over, we had a little bit of a pullback into a 0.31. Now, a 0.31, from a Fibonacci perspective, you'd really like to see 382, right? That would be fitting, but it doesn't necessarily have to. If we look at the overall deeper pullback on a measured leg, you'll notice that puts it right at about a 382. We don't have to modify it too much. If we get a two-legged correction back, that would put it at 382 with a line of support at around 15,718.25. Now, when we zoom in a little bit closer to the 15-minute chart to see what's going on from there, drag in, there we go, we can see a couple things. First off, we need to look at the DP correlation zones. The DP correlation zones, if you don't know what those are, you can find those on the morning brief. We post those every single morning for the major markets that we are taking a look at. But those are these horizontal levels that you see across my screen. And what I'm looking for is I want to see, do they line up with anything? Structurally, are they in a good spot? As an example, if we look down here, we have a -1. This is -0.5, -1. -1 lines up perfectly at the previous swing low. But that's really about it. The -0.5 is in a very nice area of structure, and we'll get to that in just a second. But that's really what I want to see is, do they line up with anything structurally? The only zones that we really have, as far as supportiveness goes, is down here. That would be at around the 16,050s, or if it wants to dip a little bit lower, 15,900s. As far as resistance goes, the next zone really up at the 16,350s, and that's about it. There's not really much else above that. So all-time highs, maybe again? We'll have to wait and see. Looking a little bit closer, though, as far as the structural patterning, we started off on the lows with this L3 continuation to the upside, and it was messy, but it finally had the continuation back to the upside. Now, after an L3, usually you see an L1 continuation for the follow-through, and they did not show up to the party at all. They got completely train-wrecked. And when that happens, that creates a secondary scenario where we have to look back at the overall trend and see, well, the trend is trying to go down. The 60-minute trend is obviously very aggressively bullish, but we know that we're trying to get a secondary pullback to this move. So seeing the bulls fail here triggers the seller's ability to sell into the L1 that was lost with a stop above the highs, and a continuation mentality all the way back down to at least the L4, and maybe even all the way down to a new low. Now, from the bull's perspective, the way that this stands out from a structural high is that we put in this L3, we broke above the L1s, we missed the L1, obviously, that fell apart, and usually on the continuation down, when the sellers re-up off of that, or the longs get out, however you want to look at it, they cycle down to around the L4 or L5. Now, these levels in and of themselves, what we want to see is, do they line up with anything? And well, the L4 lines up beautifully with previous structure. If we draw a channel off of the lows and transpose that onto the highs, we can see that the market blew off the high by that distance. And if we measure the downside distance, that same size, that puts us directly into the L4. So there's a lot of interest in a slightly further continuation leg to the downside at around the 16,038.75s to possibly even the 16,000 evens. Big psychological level, and chances are there's a lot of stops under here that JP and the crew might want to buy into to try to get a lift back up. All right, let's take a look at the S&P, swap over there and see what's going on. Now, again, the S&P is very similar to the Nasdaq. They usually go hand in hand. So the analysis isn't going to be much different. We've got a two-legged correction possibility, but the Nasdaq versus the S&P is significantly higher on these lows. I mean, it's pulled back 0.21, you know, whereas the Nasdaq was 0.31, looking at 3.8. If this were to come into parity with the 3.8, that would place prices on the S&P down to 45.63 or so. That's a pretty big pullback from where we are now and far extended beyond a measured move. For the S&P, in this case, it might be more beneficial, given how disgusting Wave 2 was inside of here, to just keep on this really aggressive train and roll up to the highs. If the market does want to pull back, if the Nasdaq starts pulling back, the S&P may want to try to hold on and not even break down through the lows, or if it does, not by much, down to the 46.08s. Now, zooming in a little bit closer to the 15-minute chart, looking at DP correlations again, this one kind of puts us in the middle of nowhere. We've got our positive half DP, which is a nice zone of resistance at 47.05 structurally, but who wants to sell this market? From a bull's perspective, again, we have an overshot on the highs, equidistant on the lows, puts us in an L4 after an L3. Here's the difference, though. The S&P had the L3 into an L1. They worked. The Nasdaq didn't have that. The S&P does. They also followed through with a second L1. When they tried to get the third, it fell apart. A lot of times you'll see them hold those L2s in that cycle for a continuation phase up. I would still like to see them overshoot down in the L4s for a regain of more interest because it just kind of fits a little bit better. And if we look at the overall order flow from the bottom to the top, noting that the S&P is, again, stronger so far than the than the Nasdaq, the POC lining up down here at 46.50 adds to that structural incentive of the bulls re-upping to the long. Next up then, after that, we're taking a look at gold. Gold just doesn't stop going up. This thing is screaming higher. It's kind of a breath of fresh air considering this barbed wire garbage we had before. The market is seeing some really, really nice momentum to the upside. I just accidentally moved that. Whoops. There we go. And as far as the continuation phasing to the upside goes, the bulls are looking really strong, but maybe running out of steam a little bit. They've been going up and up and up and up. And if we look at this last rally, it was an L2 rally into an L2 rally into nothing. It just kept going up and up and up and up and never really pulled back far enough to even get an L1. So a lot of traders are going to be looking for that deeper L2 with a continuation phase. And that doesn't happen until around the 1835s to 25s, that whole zone down there. Now, interestingly enough, that also goes back to the previous gigantic news candle that was back here. The high and low of that candle line up beautifully with that L2. The high is resistance, which is actually obviously holding. So if we can get a little bit of a dip to the downside for the bulls, that would be the major zone of interest. But as it stands, we're kind of in no man's land. We've got to see a bit more info. We're going sideways. The POC's in the middle. That does have a chance to break through and continue up for another leg higher. But, I mean, really, that leaves not a whole lot to work with, and a lot of buyers are going to be left in the dust if that happens, meaning that the next pullback is probably going to be a bit deeper. It would be really nice, really beneficial to see a pullback down into these 1835s sooner than later. Now, just taking a quick step back out and looking at gold on the 60-minute chart, we can see here as well, we finally broken away from that choppy, sloppy, disgusting stuff, and we've got ourselves a nice possibility of a bull trend. We're just getting a little bit stuck up at the highs here. Next up is crude oil, which looks like a carnival ride right now. This thing looks like a mess. The 15-minute chart has markings all over the place. Let's look at the 60-minute first and see what's going on here. As far as the 60-minute perspective is concerned, one thing is very obvious. We've got a POC which has become very top-weighted. And whenever we have that type of situation, I want to see why is it top-weighted, right? Were there shorts that were stuck? Are there new sellers coming in? What's going on? Well, earlier in the move, sellers obviously got stuck. They got squeezed, continued up, got stuck even more, further up, and really starting to bury the hatchet in there, trying to drive the volume in. So if that's the case, then realistically we have to look at it from their risk tolerances, from the high down to that POC as their break-even point or as their average. And we want to see, are they showing supportiveness at the scalping target? Are they showing supportiveness at 2-to-1s, at 3-to-1s, etc.? The scalping objective is a brick wall right now, and it is not letting the market through. So long as that's the case, it's going to have a heck of a time pulling down any further, and if it does, it's probably not going to go very far. More likely, the sellers need to get through this area, treat it as resistance, then they've got clear sailing down to the lower 74s. Where we are right now, all things kind of considered, well, the sellers are holding and taking profit into this, meaning that the bulls might very well have a shot back to the upside. So taking that context over to the 15-minute chart then, we can see that we've got this little descending wedge working its way lower with a couple different bottoms that we can mark up. We've got the first and then the second. The second one arguably is holding much nicer in trying to rally back to the upside. In order for the bulls to actually take this, we're going to need to see them migrate above the POC, which is at 81.26, and then possibly have a breakout pullback. Falling resistance up here is also in the way. So one of the more beneficial scenarios here is either swings are in really early down here with teeny tiny risk, or we're waiting for a little bit more follow-through continuation to the upside to add to the context that the bulls are taking over. And furthermore, they need to break above that 81.26 as proof. Every time they've done it before, it's been a total failure. So they really need to get above that 81.26 and stick the landing. And then finally, we've got Bitcoin, which, I mean, for the most part, is just kind of going sideways. It's not really doing a whole lot of anything, in fact. But with this sideways action that it's got going on here, one big thing that I want to keep an eye on is, again, are there any directional biases on this? Well, I mean, from a 60-minute perspective, if we zoom out just a little bit, we can see that it's pretty obviously bullish. But this over here doesn't look like this over here, right? This was screaming higher. This is predominantly sideways and not really breaking new highs very well. That likely tells us that we might be near the end of a shorter or kind of medium-term cycle. This is a 60-minute chart after all. So if we're looking at this cycling to the upside and we zoom in a little bit closer and we see that the most recent lowest low is down here, we have a cycle up, maybe wave 1, wave 2, wave 3, wave 4, wave 5. It could be something along those lines. But that said, if we're looking at this overall momentum, then why are we still continuing to the upside? Why is it that every time the market tries to go underneath the previous low, it's gobbled up like it's going out of style? Right? The bulls are obviously very intent on continuing this momentum to the upside. But what stands to relative reason, I would think, would be that they need some value pullback. Buying way up here at 64,000, that's just too much. It's too expensive, especially considering that not too long ago in mid-September, we were back in the 42s. So a lot of traders are going to be looking at this like wave 1, wave 2, wave 3, wave 4, wave 5 completion. We probably see a pullback. A lot of times on those pullbacks, we come back to wave 4, right? Wave 4 then would be the low here, but potentially all the way inside of that if it wants to pull back a little bit deeper. Either way, structurally, this is the zone of support at around 58,000. If we look a little bit further, we can also see that there's some rising support that we may be able to play with along with that. The big thing that we really need to see here is that we're going sideways, predominantly not really doing anything in the 60-minute chart. A deeper pullback or to get the heck out of here is going to be pretty necessary. If we're looking at it on the 15-minute perspective, we can see that giant move up and down. That's what is creating this barrier. The market is having a heck of a time getting through that. And if we're looking at the DPs, they line up really nicely as well. That's the -1. And it's, well, from a probability standpoint, a beautiful zone of interest to try to hold on to it. The low of that big candle is at 62,803. The high of it is up at 68,648.21. The movement that's going on in here is similar or reminiscent of a megaphone, but they just overshot the highs. We'll have to wait and see what they can do at the lows. The trend does still seem to be a little bit slightly downward angled or at least neutral. So at the very least, bulls are probably going to want to buy a little bit deeper down. And if we look backward, it's fairly obvious to see that buyers were very interested down in these dips once again, back in the 60s to 58s. That's the hot spot right now, and we're just not quite there yet. We're in the middle. There may be some short-term bounces to the upside, but, I mean, as it stands, we're kind of, there's a little bit to be desired, All right, folks, well, that's going to do it for this one. I hope you had an amazing trading day today and made your way through the day unharmed. I know today was a little bit of a tough one, a little bit vindictive so far. We're beyond the halfway point now. Now we can go into the end of the day, hopefully with a little bit of an idea of what to expect and kind of, see what they want to do. Maybe we get some pretty solid movement. Now, if you want to hang out with me longer, even beyond the YouTube fam times, check out the VIP membership to get in our members-only trade room. That way you can see the trades while they actually happen instead of the recordings at the end of the day or later on. If you have any questions, you can drop them in the comments below or shoot us a message. I would love to hear from you either way. Have an awesome day. That's going to do it for this one. Thanks, and we'll see you in the next.